Have you ever wondered if what you learn in a classroom can actually make you money in the stock market? Well, today, we're going to look at a team of students who put that exact idea to the test. Let's dig into their playbook.
So, picture this. Someone hands you 100,000 ringgit, it's virtual money, but still, and they tell you, go play the stock market. Kind of stressful, right? Well, that was the real deal for a group of university students in an investment game.
And here they are. Our key players are a team of finance students from University Science Islam Malaysia. This wasn't just some homework assignment for them. They were actually testing everything they'd learned against a real, live, though simulated, market.
And get this, over just one semester, they made 143 trades. They weren't just guessing, they had a system to handle all the ups and downs. So this is more than just their story, really. It's their playbook, and we're about to pop the hood and see how it works.
All right, so what were the actual rules of the game? Let's take a quick look at the challenge they were up against. So, the team kicked off with a cool 100,000 in virtual cash. Their hunting ground? Sharia-compliant stocks right on the Bursa Malaysia. And the goal, it sounds simple, but it's super tough. Use what you learned in books to actually make that money grow.
Winning in the market isn't about getting lucky. It's really about having a solid plan. So let's see how this team built their strategy from the ground up, focusing on a clear method instead of just wild speculation.
Their whole approach basically boiled down to a really smart two-step process. First, they used something called fundamental analysis to figure out what to trade, which companies are even worth looking at. Then, they used technical analysis to decide when to pull the trigger. It's a classic combination, and they really nailed the execution.
So what is fundamental analysis anyway? The easiest way to think about it is like giving a company a full-on health checkup. You're not looking at the squiggly lines on a stock chart. Nope. You're digging into the business itself, its profits, how much debt it has, its value, just to make sure you're not about to invest in a company that's on life support.
And this is where it gets really cool. Look at how they actually used this. They compared a company like Far East Holdings, which was moderately valued, with a massive giant like Nestle. This tells you they weren't just hunting for bargain bin stocks. They were looking for quality companies at a fair price. This step didn't tell them when to buy, but it built them a solid watch list of companies they could trust.
Okay, on to the second part of their strategy, technical analysis. So once they knew which companies were on the radar, they turned to the charts to figure out when to make their move. This is all about spotting patterns in price and trading volume to find that perfect moment to get in, and just as importantly, to get out.
They weren't using a crystal ball here. They had a specific set of tools. First, the moving average helped them see the big picture trend. Is the stock generally going up or down? Then, the Relative Strength Index, or RSI, told them how strong that move was. Was there real power behind it? And finally, they used support and resistance levels to set clear price targets and, crucially, to know exactly where to cut their losses.
But look, you can have the best offensive strategy in the world, but it means nothing if your defense is weak. For this team, their number one most important rule was dead simple. Protect your capital at all costs.
Now this right here, this is probably the most important slide. These were their non-negotiable risk rules. They never ever put more than 20% of their portfolio into one stock. They had an ironclad rule to sell if a position lost between 4 and 8%. And maybe the biggest one? No single trade was allowed to risk more than 3% of their entire pot. That kind of discipline is what separates serious traders from gamblers.
Okay, so the playbook sounds great on paper, right? But how did it actually hold up in the heat of battle? Let's look at their best trade and their worst.
This trade was just textbook, a thing of beauty. They saw that Far East Holdings was in a clear uptrend. They bought in at a smart entry point, and they rode it up to their target. It's a perfect example of their entire system working together flawlessly.
Now let's talk about their quote-unquote worst trade. They took a position in Nestle and it immediately went south. But here's the thing. This isn't a story about failure. It's a story about incredible discipline. Instead of crossing their fingers and hoping it would turn around, their automatic cut-loss rule kicked in. The loss was small and controlled, and it saved them from a potential disaster.
And this quote from their own report just says it all, doesn't it? Taking a planned loss is one of the hardest things for any human to do. But their system took the emotion out of it. It stopped them from falling into that trap of hope-based trading, which, let's be honest, is where so many people lose their shirts.
So, after weeks of trading, hundreds of tough calls, and a real emotional roller coaster, what was the bottom line? Let's check out the final scorecard. In the end, they walked away with a profit of over 7,000 ringgit. That's a solid win by any measure. But that number alone doesn't really tell the whole story.
Because the journey to get there looked a lot more like this. It was definitely not a smooth, straight line up. See that massive dip towards the end? That is where their discipline was put to the ultimate test. They didn't panic, they stuck to the plan, they weathered the storm, and the portfolio bounced back. That scary dip? That's probably where they learned the most.
So what can we all learn from this? Well, 4 big things. First, your process is absolutely everything. Second, combining fundamental and technical analysis just gives you a massive advantage. Third, discipline will always beat emotion in the long run. And finally, making decisions as a team can help you avoid costly mistakes.
When you boil it all down, it comes back to a repeatable process built on a solid strategy, a ton of discipline, and good old-fashioned teamwork. So after seeing how they did it, it makes you think, doesn't it? What would your investment playbook look like?